Hello, traders. Welcome to our daily analysis. Apologize for missing yesterday. I took a day off due to sickness. I'm still not 100% recovered, but I think I might as well just do a quick analysis for March 1st. First thing first, we are heading into a new month. So something to keep in mind. First thing is that March will be the month that UK government scheduled to have the Article 50 trigger. So that you have to keep that in mind. Particularly speaking, March is also Federal Reserve will have their next meeting. March is also an election for Dutch. So those are something to keep in mind. And March, of course, it's only a month into April, which is the France election, and that will really be a main event. So I think March will be quite interesting for a monthly perspective. So yesterday, 28th, the main events, London session was quiet, but US has this preliminary GDP in NY New York session, but it actually says preliminary. It's actually a second estimate. So it's second estimate GDP. Normally didn't really provide too much reaction, so unless you have a huge deviation, and that was what happened. The result was 1.9%, exactly same as last time, a little bit lower than expected, but we didn't see any dollar weakness, and the reason is because a lot of people are buying into the Donald Trump's congressional speech, which was aired on last night, New York Standard Time, Eastern Standard Time. So basically, it was a very muted event, and also we have a consumer confidence from US that was largely positive than expected. Then Asian session, the catalyst main event was the GDP data, both quarter on quarter and year on year from Australia, and that came out as a large surprise. So the both number was a deviation. So I trade that event, as a risk event, both Aussie dollar, short cable Aussie. And after that, they will have manufacturing data, two manufacturing PMIs from China, which both also are positive. So of course, that really helped Australian dollar basically skyrocket. And now Australian dollar, if you look at the chart, once again, it became a strongest currency for this year. It had already been a strongest currency, but people were really nervous about that GDP data. And now, since that passed, now Australian dollar is back on the crown place. And the congressional speech from Donald Trump didn't really provide too much insight. I watched through it. It's exactly same green talks, and basically a lot of things are already released to the press. So really not too much insight, but you still see a lot of momentum getting to US dollar. Now the reason is because we have several Fed members actually came out saying that now the March rate hike is very, very likely. So basically all the member has now become a very hawkish stance for a March rate hike, and that push a March rate possibility in the futures market become a very high percentage right now. So that is very significant. So now, right now, a lot of people are start buying US dollar. Now, on top of that, US dollar had been at a quite low level back then. So a lot of people already deep buying. Now, on top of that, now the March rate hike is very possible. So we're going to expect to see a lot of US dollar strength all the way for these couple of weeks until the decision, because a lot of people will buy rumor. If the March rate is not a hike, then you will see a lot of selling. A lot of people will just dump their positions. So that was yesterday, 28th. Now today, March 1st, London session was also quiet until manufacturing PMI from UK that came out as negative than expected. Now, as I mentioned, we are heading into March. So the March will be the month that is scheduled to trigger the Article 50. That's the first thing. So the sentiment is already quite negative if you think about it. Now, what's backing UK up was the fundamental strength. So right now, if the economic start deteriorated, then that will be really not be a good picture for British pound. So that's why you gotta look out for the following data. If we have consecutive of this kind of worse data coming out from UK, on top of that, you have this negative sentiment, then British pound March will be a very bearish pound, I think. New York session, Bank of Canada released the rate as expected. The statement was not too much insight. Basically, it's still quite dovish. So what happened to Bank of Canada is that prior to the last meeting, before that, their statement was always very neutral. So last meeting, which is in January, I think, was the first time they start become a little bit dovish. They worry about the NAFTA deal. They worry about the uncertainty, political uncertainty of U.S. And after that, of course, Justin Trudeau, the Prime Minister of Canada, went to meet with Donald Trump, and everything seems to be quite fine right now. So Bank of Canada is not that dovish, but still a little bit dovish. So that's really the pressure into Canadian dollar if you are buying it. Because if you look at the oil market, it's still very resilient. Everything's great. You look at the fundamental data from Canada, it's performing well. But Canadian dollar was largely sort of basically yesterday all the way until now. I actually got stopped out on a few of my Canadian dollar trade. And the reason is really the central banks, taking really the precedence with other factors. So that's what happened for Bank of Canada. Now, quick recap. So right now, my personal view for each currency. For Euro, I think, without any tier 1 data, Euro will continue to ride on the sentiment. And right now, of course, it's leaning more in the downside due to the political unstableness. Now, March will be the election for Dutch. Of course, that's not going to provide too much. We're not going to have a Dutch exit, but that alone will give people a lot of foreshadowing for what's happening in France, what's happening in Germany. So the negative sentiment will continue. Now, fundamentally speaking, the data had been promising, but the central bank, ECB, has no intention to stop QE or giving any hint or sign that they are thinking that inflation is too high. On the contrary, they're saying that they are fine to let inflation go a little bit higher. So that's something to take into consideration because central bank will always take in the more priority effect for the market. So because of that, we still think Euro is a bearish currency. US dollar right now, the Donald Trump speech again did not provide too much movement, and right now his negative sentiment has a little bit faded out. So as I mentioned, the market eventually will adjust to the president because you need to get used to him for the next 4 years. So once people start getting used to his style, then it wouldn't have too much reaction for what he said or done. So right now, a lot of traders are turning their attention to a Federal Reserve. And the member, as mentioned, came out saying that the March rate hike possibility now is very, very likely. So that, of course, boosts the US dollar. Now, on top of that, the fundamental data had already been very promising. So right now, since the central bank and the fundamental data have been in the same direction, so we are expecting to see continuation of dollar strength from now on. For British pound, as already mentioned, I think it will be a continuation of negative. But if the fundamental data still providing to be resilient, then you will always have an equal amount of large buyer wanting to buy British pound. So that's something you have to be careful for pound because it's not going to drop in a one-way street. And what's been holding UK basically is the economy. As Kip mentioned, 2016, they are actually the best performing economy, even in Eurozone. So that's something, it's a fact, and people cannot just brush it off. So right now, what's troubling is that the economy data seems to be kind of deteriorated. It's not that large, it's just one or two data. But if we see continuation of negative data, then that will be a worry sign. For Canadian dollar, as I mentioned, fundamentally everything is actually quite well. Oil market is very strong. So really, the pressure comes from Bank of Canada. And tomorrow we will have another GDP data for CAD, so that will be something to look out for. So for CAD, my personal view is that I'm still going to buy it against a weaker currency, such as CAD Yen or CAD Swiss franc. But I'm pretty much going to avoid buying against a stronger currency and pretty much going to short it against a stronger currency, such as Australian dollar or New Zealand dollar. Australian dollar right now is very, very strong. The only thing you need to watch out is don't buy at a high level. Right now, it's really, really at a lot of high level for a lot of pairs. So that's something you need to watch out for. But right now, the fundamentals speaking, the central bank's policy, and even the commodity, the Chinese trading, everything looking very well. Same thing applied to New Zealand dollar, because back then New Zealand dollar actually had a better fundamental data than Australia. What's pressured down is the central bank itself. Today we have the RBNZ Wheeler spoke again, and he says that basically the risks around future rate movements are equally balanced, and RBNZ is comfortable with current economic projections. So it's more neutral comparing to before when he tried to jabber in the central bank's rate. So because of that, we think New Zealand dollar eventually is going to regain its fundamental strength against other weaker currency. And right now, Japanese yen, Swiss franc will be a biggest loser. If you look at the equity market, everything is green, everything is really, really booming. That, of course, few elements. First of all, Federal Reserve members saying they might hike the rate. We have promising data from China, from Australia, saying that the market is picking up its strength. Now, of course, this kind of sentiment thing is not really reliable, right? It might shift any moment. But for now, that's really the way it is. And fundamentally speaking, of course, Japanese and Swiss franc always in a negative territory. So the only thing you want to watch out is sometimes the downside movement. If you buying, say, dollar yen, dollar Swiss, is very large and you might get stopped out. That certainly happened to me. So be careful, I think, to buying at the right level. That's something I need to work on for myself. That's just something to avoid it. So let's take a look at my trade. So I don't know if I mentioned, but last Friday I did get a CAD Yen trade on top of the positive data, but over Monday, Tuesday, I got stopped out because we had such a huge panic movement into the market, basically overall buy into Japanese yen ahead of Donald Trump's speech, ahead of Bank of Canada release, ahead of a lot of Chinese data. So unfortunately, although it was a nice trade plan, I follow everything, but you still get stopped out, and that's just the way it is. This is the trade that's a good loss for me because I follow everything, and you just have to accept the loss. I trade Australian GDP last night, Asian session. Again, got in. Didn't really have much movement when I got in, and it actually started working today, especially on top of the British pound weakness. So I got profit here almost, just 101, 2%. But of course, it keep dropping to the new low of 1.60. So this one is done and dusted. So that's my risk event trade. I didn't get to post it on my website. Of course, apologize because I'm sick. And also, as I mentioned, a lot of risk event trade are very time-wise. So I couldn't really post it to you. It's kind of meaningless, to be honest, to post this kind of risk events. Cash Swiss, I actually got in this trade. If you want to do this kind of trade, it's not a really high conviction trade, but for me, it's still a risk event trade. It's a post-risk event trade. So I basically looking for this kind of huge movement that's outside a daily range by 2. So for me, when I have this kind of movement, I quickly look at a daily chart and to see if it's outside the range, and look at this huge red candle. And I want to see if I have any sort of support. And I do have this nice 200-day moving average. And even if you look at just with your bare eye, you can tell this is a nice support area. And then if I have a fundamental bias, it means that if I think Canadian dollar is stronger than Swiss franc, and I think, of course, Canadian dollar, regardless of the Bank of Canada, it's of course going to be fundamentally stronger than Swiss franc. So if I have those things check in mind, I will buy at a low point. So I did got in, you've seen sort of that it's double bottom. So I did got in at 75.50 right now. I'm just going to ride it maybe at 76.50 or even at 77, depending on the condition. So this is the other type of risk events that I like to trade. It's called a post-risk event. So one is that I trade at the risk event when there is a surprise. The other one is I trade after the risk event. I think this is great for a lot of swing traders. If you don't have time to sit in front of your desk for the risk event, you can always get in afterwards. It doesn't need to have a specific risk event. If you look at this kind of sentimental movement, that's really not not normal things like that, then you could trade these kind of things. So that's two things I'm in for my intraday trade. And let's take a look at my daily trade. Let's go over 28 pairs right now. Just give me 1 second. Okay, so I'll go over 28 pairs, and if I'm in the trade or whatever, I will tell you. So Euro Pound, I'm not in the trade. Back then I tell you guys, if you're short, be very careful with this 200-day moving average, and this moving average is very strong support. It actually bounced back going up. So Euro Pound was never something I would like to do, particularly as I keep mentioning, because I think they both are quite weak as a currency pair. So, that's just the way it is. Euro 3, same thing, not something I do. I mentioned, you have this huge green candle, which I completely ignore because I'm not even wanting to buy euro at all. So, if you're doing the stop pending, of course, you're not gonna get in. But of course, you have this huge red candle today. So this is the pair that I tend to ignore if I couldn't find any fundamental strength or weakness. On euro dollar, I actually got a short on top of this kangaroo tail. Now, it's definitely not a perfect position. It's there's no space at all. It looks like an inside candle. So I got in really on top of this 1.06 handle. So for me, the justification is just because I like 1.06 handle, and I think on top of that we have a fresh new sentiment into the US dollar. So that's why I got into this trade. My stop loss is a bit above 1.07, and really just looking to the downside, maybe 104, which is the previous low area. So that's my justification for getting to this trade right at this support area. Right at this resistance area. Now let's keep going. So this is the daily trade I have. Now Euro Aussie, of course, this is the one I got in February 14. I'm still in this trade again. I got in at, if you want to know, it's just right at 1.38. So 1.38 is holding well. It's something keep holding it. We have another signal today. You could get into it again. No, I tempting to get into it, but I don't want to do it because there's no point for me to get into at the exactly same level, right? So first thing hasn't worked out yet. So for me, I just going to keep holding this trade, but it looks nice as a big bearish big shadow. So if you are not in this trade, I think 38, you could even just put a penny on. I think 38 will hold up pretty well. Stop loss, it's more of a personal choice. It's really up to you to see where you want to trade this one. And let's keep going. Euro Aussie. Now Euro CAD actually continued to edge higher. Of course, it's because of the CAD weakness, and right now it's actually at a pretty nice level here. So if you look at this 40, 50, or even 40 is 400 is here. But if you look at here, this is not a bad support area, right? If we go to weekly chart and you sort of zoom out, this is actually a pretty nice support area that we are in right now. So this could be something that if you're looking to get into it, if you're looking to get into EuroCAD. We don't have a signal, of course, for EuroCAD, so you could wait for a signal, and then you could get into after if you have a signal. So you could wait first because it might very easy to burst out and keep going higher. So of course, always wait for a signal just to show you there's some sort of like Euro Aussie, you have this kind of signal to show you there's some sort of strong reversal. Now Euro NewZ, we are still in this one. Of course, we suffer a nasty drawdown right now. So we got in, of course, at this red candle, really reaching 46. Maybe we should have got out here, but it wasn't just, it's just not low enough, to be honest. I was hoping it at least to go to 45.50. So it now went against us, and I'm still holding this trade, of course, because fundamentally it is still, the bias is still quite strong. 48 is a strong support and resistance level, so I'm hoping that 48 can hold in well, but we'll see what happened. Euro yen, on the other hand, keep going up, but it's not something I personally trade. Pound Swiss continue to go down. Basically, all the pound carrier keep dropping. Now, cable was also the one we are in. I got in this one at the 25 level, and really this one didn't really get in with any signal. If you know, only maybe this one you have this bearish big shadow. But I got in this one basically from a risk event, and I just put a pending order right here. So this is more like a level play, and as you can see, of course, it's working out well. Now we seem to keep dropping lower. This is not my profit. My profit I put in here, but I don't know whether we're gonna reach 20 again. We'll see what happened. Of course, tempting to take everything right here. So we'll see what happened. Pound Aussie, again, this is the thing that I tend to realize. If you're doing this kind of swing trade, it's really best to just set and forget, because back then we got in here and we moved to stop loss to break even, and we got our break even, and we would have profit at our target if we didn't do that. So that's something I realized. Like, if you trading fundamental analysis, you want to have a micro management. You don't want to doing too much of a micro style, and that's what happened to me. So of course, you trade and learn. For me, this is a very many of you know I definitely don't come from a fundamental trader. I came from technical. So for me, a transition, sometimes it's a conflict, sometimes it's something I need to still learning for myself. So this is something, of course, kind of shame. We could have profit, but we didn't get it. So this is another trade we were in. Pound CAD, same thing. This is not a bad signal. British pound looks like it's going to keep going lower. So pound CAD, if you're interested, you could short it at this level. Not necessarily this candle, but at this level. Pound NewZ, also nice kangaroo tail today. I don't know if it's a perfect kangaroo tail, but it's a nice level to short. And finally, Pound Yen is not something we're looking to do. Same as Swiss franc, Japanese yen, not something we're looking to do. Dollar Swiss, we are still in this trade, and again, we got in this. It's not something I kind of messed up, to be honest with you, because this is really a resistance, right? So what I should have done is to keep my previous order and don't add it here, because this is really buying below the resistance. But I did it nevertheless, and now it does look like it's gonna go up since dollar is gaining a lot of strength. But we will see what happened to this trade. Dollar Swiss, dollar yen is another thing we are in. It keep edging higher. Now dollar is more confident to hold it nowadays, really, especially when Federal Reserve comment, and right now the March interest rate hike possibility. So really looking to touch 115. I think shouldn't have problem to touch 115, and then that will be a critical point to see what's gonna happen at 115. Dollar CAD, on the other hand, is a little bit overbought, I think, because right now the market is really getting excited, getting ahead of itself. Right now you are really at this sort of strong resistance area. But it's not enough for me to short, because I don't have fundamental bias. I don't think either one is stronger than the other. So it's not something I will get into just because we are at the resistance. Aussie Swiss, we basically survived. Back then we got in this trade, maybe not the best area. We got in at a breakout at 77, and huge nasty drawdown, survive here, and now we are still back at ground zero. So we'll see what happened to this trade. Hopefully we will touch 78. Aussie dollar was the one we got out, and look at Aussie dollar. You can tell that even Aussie has lost a little bit battleground to the US dollar. Just shows you that US dollar is very strong right now. Aussie CAD, of course, keep edging higher and higher, and that's just due to a CAD weakness. Now Aussie Newsy is not looking well. We might get stop out. It looks like we will get stop out very soon. So this is really not preventable. We got in with a nice candle, nice area, very strong resistance, and unfortunately the GDP really, I thought the GDP will be positive to support Aussie, but it was way more than a positive, and that really give Aussie such a nice push. So we will see what happens if we're going to get stop out or not. It is what it is. The only thing I might do well is maybe perhaps could maybe put a penny order at 71.07, things like that. Then I might still able to survive, but nevertheless, not really preventable. Aussie CAD, I already go for that. Aussie Yen also had a huge candle. So again, kind of shame that we got stop out. So again, we got in this candle February 14th at the breakout at the 87.58.68. So back then was hoping to just keep going higher, but that did not happen. So that's the thing, when you buying at a breakout, you basically buying at high. Doesn't mean it's not gonna work. Sometimes it works. If you look at dollar yen back then, you have this kind of nice breakout candle, and it never comes back. So so it doesn't mean, it's just give and take. It really depends on your personal choice. So if you're buying at a breakout, you just have to be careful that you're buying at a high, and you have to suffer this kind of nasty drawdown. And unfortunately, we couldn't held, and we got stopped out. But of course, it keep going up again. Now this one I was tempting to get in yesterday, but it's not really a perfect kangaroo tail. So I did put a pending order at 86, and thinking just playing with the level. That of course did not happen. It just shoots up. So it's the trade we missed. It is what it is. Credit Suisse, we are still in this trade, barely survive. It looks like 200-day moving average is holding up now, and really, if daily perspective, it's really a nasty drawdown. But we will see what happened. CAD Yen, of course, is the one we got stop out, both in a daily and intraday trade. So we got in with this green candle. It does look, if you're looking back, I really don't think it's not a good entry. It's actually a good entry. If you're looking back, you have a nice resistance, a nice support area, a nice solid green candle. Everything is looking very nice. It's looking nice. Now even you have this red candle, it doesn't mean it's gonna go down, right? Sometimes you have a pulse movement and you're going to shoot up, but that's not the case. We drop further and then got stopped on. So if you ask me what could I have done better, I will say maybe I don't know what I could have done better, to be honest with you. Maybe I should buy at 86 instead of at, but it doesn't really make that much difference because this drop was just really huge, lower than February 8th, lower than January 23rd, even lower than last year, December 5th. So this drop was not preventable, as this is a new swing low. Because if you buy, you put your stop loss at 85, 84.50, it's perfectly logic. This is a very strong swing low. It haven't been touched since last year. So this really not preventable, to be honest with you. So I don't think there's anything I can done better in this perspective. So that's just the way it is. Let's keep going. Newly Swiss is also the one we are in, also at a nasty drawdown. I also got in at a nice area, touch this a huge nasty drawdown. Again, I don't think anything I could done better. Perhaps long as 72, but you risking the chance of missing a trade. So I say if you put a stop pending order, the good thing is that you getting with nice momentum, and the bad thing is that sometimes it hasn't touched your profit and it would stop you out. And of course you can say, oh, let me move to break even, but sometimes it goes down, stop you at break even, and keep going up. So I think it's really your personal choice. The most important things have to be congruent with the approach. So for me, I could of course put at 72, wait for it to touch, but I tend to actually like to play that nowadays, to play at the levels instead of the actual candlesticks. I still wait for candlestick to show up, but I don't like to use that as a trigger. I'd rather wait for it to touch it again. I think that might be a good way to do it, but we'll see. But nevertheless, I'm still surviving in this trade. My stop loss is actually quite low in this one. It's way below. It's 71.40, I think. So again, it's a strong swing low. So we will see if New Zealand Swiss can survive. Now, New Zealand dollar is another trade I'm in. And I'm in, of course, prior to the Donald Trump speech, prior to the Federal Reserve member. Because if you remember back then, dollar has a little bit negative sentiment. So for me, I have a lot of dollar long position already. So for me, it's like a hedging trade. This one, the only thing I did better, of course, is I didn't go with this candle high. If I did, it will be, for example, if I did with this one, this will be terrible because I would get stopped already. So I got in at 71.75, which I think is a quite nice support area. And of course 71.50 will be even better, but of course you risk the chance of not getting filled. So I got in at 71.50, 71.75. Stop loss is way below here, so we'll see if 200-day moving average can hold on well. Basically, I'm still betting on the New Zealand dollar strength, so we will see how the market react. New Zealand CAD is the one we got in and profit already. So I got in. I didn't get in at this candle. I think I missed it, and I got in later on when I put an order here. So for me, again, this is a nice strong support area, 94.50 or 94.25. Nice area, and stop loss just below this 90, this swing. And then of course it hits my profit very fast because of the Canadian dollar weakness. So this one is down. And New Zealand is another one we're in. You can tell right away we are in at 81. Stop loss at 79, 95, around this area. Looking at 83. Again, 81 is a very strong support area. So hoping, and fundamental bias is very strong. So hoping this will work out. So basically, that's what happened in my intraday trade. February, what I learned, of course, I think it just be congruent with my approach, because sometimes, as I mentioned, I'm still fairly new to this kind of fundamental trading, start from last year. So for me, a lot of time I will still get confused whether to trade technically or fundamentally, and I think both are very important, but sometimes they do jeopardize with each other, especially as a technical trader myself. Sometimes I really like to fine-tuning things, and I think that's an issue if you are doing the trade in a more micro perspective. So that's something I'm still learning and adjusting. And that's pretty much it. So my March basically main goal is just keep trading, mainly be congruent with my approach. This is, as you know, I mentioned so many times to you guys, but this is really just talking to myself. Really have to be congruent, and I think that's very, very important. Whatever approach you use, you have to be consistent with that. So that's it for now. Later on in 15 minutes, we will have the trade balance from Australian. Looking to trade that again. Let's see what happened. Okay, so I will see you guys again. If you have any question, feel free to ask me. Thanks for watching, and bye bye.